and good morning or good afternoon to everybody. Thank you for joining us today. So my name is David Godfrey, Director of Strategic Solution Consulting for ACI Worldwide, and I'll be the moderator today, taking you through this session on building a winning real-time strategy in the Kingdom of Saudi Arabia. As competitive and regulatory pressure intensifies globally, financial institutions are very quickly realizing they need to transform their payment systems to drive down costs and to consolidate redundant functions. Adding to this is the consumer demand for speed and convenience and simplicity around payments. This is making it clear that there's been a real push to implement real-time payments around the world. We're aware that, of course, Saudi Arabia will imminently be looking to implement a real-time payment scheme, and therefore we'd like to discuss today why financial institutions need to be thinking and preparing their strategy for real-time payments today. Today you'll hear the view from Accenture and from ACI. I'm very happy to be joined by several guys from Accenture. So I'd like to ask them to each introduce themselves to you. So Graham, if you could just introduce yourself, please.
Thanks, David, and thanks for having us. My name is Graham Rothwell. I'm based in Melbourne, Australia. I'm part of the Accenture Financial Services practice, and more specifically, I lead our payments practice for Africa and APAC. Thanks, David.
Thank you very much, Graham. And also, Lufty, if you could introduce yourself, please.
Good morning. Thank you, David. So my name is Lufty Zafur. I'm based out of the Middle East region, very much focusing on the GCC and Saudi Arabia in specific. So over the past 17 years, I've led and been engaged in a number of payments projects, both on the infrastructure side, the payments side, the service side, as well as setting up regulatory propositions for central banks in the Middle East and North Africa and globally. It's a pleasure being here. Thank you.
Yep. Thank you, Graham, and thank you, Lufty.
David, we've also got Mike on the phone.
Okay. Apologies. And Mike, if you could introduce yourself as well, please.
Hi there. Mike here. Can you hear me okay?
Yes, we can.
Good. Excellent. It's Mike Esson here. Yeah, I'm actually part of Graham's team based in Sydney, and I'm a payment subject matter expert. I've particularly significant experience in real-time payments, having been involved in, I think now it's around 7 different schemes, and including UK parcel payments, Singapore, the Australia New Payments Platform. Also actually was involved early in a workshop with Sama in Riyadh. So seeing both the core systems and dealing with the banks, how they deal with implementing and dealing with the real-time system. So hopefully can provide some insight from some of those programs, and particularly some of the experiences with New Payments Platform in Australia, which went live earlier this year.
Thanks very much, Mike. And again, just to say thank you to all 3 of our panelists from Accenture for taking the time today to share their experience. Hoping to have a very informative and interactive session today, and we do welcome questions from any of our attendees. So hopefully you can see the agenda on the screen. You'll walk away from today's discussion understanding more about the business case for real-time payments, how the value-added services that you can also create can benefit your institution, and how financial institutions in the Kingdom of Saudi Arabia can maximize the real-time payments opportunity. So we're going to start just by giving some background introduction and context to help everybody understand what it is when we talk about real-time payments. What is it that we really mean? So what are real-time payments? Again, what we put up here are some commonly understood definitions that people collectively understand when we talk about real-time payments, of what it means to process real-time payments. So, for example, the fact that this is always on, it's always available. Almost all of the real-time payment schemes that we see around the world are 24/7 by 365 days a year. and typically with a very, very quick end-to-end transaction time. If we look in the UK, it started at around about less than 15 seconds. We're seeing with some of the newer schemes that are being implemented that that's less than 5 seconds. And indeed, in a couple of countries, even looking at less than 1.5 seconds. So obviously, the ability to be always on, always connected, 24/7, and process transactions very, very quickly. You can imagine as a financial institution, that could create some very new types of demand or new challenges for you as you look to implement real-time payments. The need, obviously, to have the funding and the liquidity available to support the movement of funds, because obviously funds on real-time payments are moved in real time and they're moved irrevocably. So as a financial institution, being able to fund and manage the liquidity also creates new challenges. You have to be able to reduce failures. So again, if you can imagine, we're looking at transactions, as we said, that need to be processed very, very quickly in essentially in real time. These need to be processed using straight-through processing and using automation, minimizing any kind of manual intervention in the payment process. You need to be able to talk to anyone and to make these payment schemes as ubiquitous as possible. And therefore, we're looking at using common, open, international standards. Things like ISO 28022 has been very widely adopted for real-time payments. And then again, a move to open banking standards using open APIs. An example of this, of course, in Europe, you have initiatives such as PSD2 that is driving banks to expose their services using open API technology. Increasingly, as we move forward, we'll see that real-time payments mean there are no borders. Currently, real-time payments are generally focused on domestic payments within a particular geography, but increasingly, we believe this will start to become global or at least regional. So real-time payments between different countries in a given region and eventually in all over the world. And we'll look to discuss some of the panelists' thoughts on this as we go through the presentation. And then finally, no customer divide. So currently payment systems can often be divided in terms of their usage. Some payment systems are more focused at real-time customer base, some are more focused at the corporate segment. One of the things that we're seeing with real-time payments is that divide is actually disappearing, and real-time payments are something that can serve both sectors of the market. Now, obviously, there are different business cases for how you can look to use real-time payments to serve your retail and corporate segments. And again, we'll talk through that as we go through some of the presentation. So, what we'd now like to do is to look at some of the global trends that we're seeing in real-time payments and try and see if we can help you to understand what we've learned from the experience in these other markets. So Graham and Mike, over to you. Maybe you could share some of the experiences and the lessons learned from real-time payments in other markets. What are the issues that the institution should focus on? Obviously, it's very, very easy to focus on obvious requirements with real-time payments, such as just the connectivity. But there's, as we said, there's lots and lots of other things that the institutions need to think about that go far beyond that. So, Graham and Mike, over to you. Maybe you could share some of your experience here.
Yeah, sure. Thanks, David. And maybe I might just kick off with a bit of context around our point of view on payments. And I frame it around the word "what if," and I spell IIF. And the reason we have that is it's an abbreviation for instant, invisible, and free. And that's where we think the world of payments is going. And so the question we pose to participants in the payment schemes, such as banks, is what does that mean for you? And how do you generate new business models and value pools for both yourselves and your customers in a world that's going to operate like that? When it comes to real-time payments, I mean, a number of countries have had real-time for quite a long time, countries like India. More recently, in sort of the last 5 to 10 years, there was a sort of a wave of real-time implementations that picked up countries like the UK and Singapore. And then more recently, the latest wave, which we've seen countries like Australia Canada moving into, sort of built on what was already happening in markets like the UK, but then extended it with richer data, ISO 2022, etc., and worked on a paradigm of it's not only real-time value transfer, it's also real-time data transfer, which is quite important. But beyond that, I see two other waves coming in parallel, and David, you kind of touched on them. One is the confluence of real-time payments with open banking, and what that means for the ability to create new digital offerings that go up and down the value tree or the value chain within which the banks and their customers operate. And then the other one, which you also touched on, David, but we can talk about on the track, is the migration to cross-border international real-time, which we're starting to see happen with consortiums with Ripple and Swift GPI, etc. So that's kind of where I see the major focus going to happen. Mike, maybe you can provide some commentary around considerations specifically in sort of that wave two and into the sort of the new waves that banks need to think about.
Sure, yes. Look, we've seen a number of programs around the world, and what banks are dealing with this. I think it's important, first of all, to recognise one fundamental thing, and that was mentioned early on, that the fact that this is a 24/7 always-on scheme. And one of the things that is often an immediate challenge for banks is that a lot of their systems are not based around always on 24/7. They're more business hours, five days of the week, etc. And it's not just the connection to the real-time scheme that is the thing that banks have to deal with, but actually looking across their whole organisation, dealing with the clearing and settlement and the posting of the accounts, includes things like fraud and AML, etc., which now have to move into a real-time 24/7 operation, even things like call centres, help desks, etc. And so one of the tasks here is that the banks have to address early on is looking at the impact of this new requirement across the whole bank. Even if one is looking at a relatively simple compliance with the requirement. In some cases, some countries, the minimum compliant position is a bank needs to be able to receive real-time payments, not necessarily send them. But obviously, then one moves up the process of doing more with the real-time scheme, not just around the value transfer, but maybe with real-time information as well. But even in the sort of simple compliance, there's still quite a lot of aspects to look at. Some technology, but also some things around process. So we've built up some checklists and things like that, which we work with banks to help them look right across the organisation. Then, and it sort of depends on the nature of the scheme, how the connectivity is going to be achieved with it. But generally speaking, there is some form of gateway which is implemented in order to maintain the message flow and maintain the state of the payment across the network, and there are a variety. Either the operator at the centre may provide that, or maybe other vendors will provide those gateways, which enable also some aspects of how to deal. Again, if it's on full time, if there are any issues, it's important to be able to maintain the availability and reliability, etc. And that brings in some functions that are required within the gateway. Beyond that, one of the terms that was coined in the Australian market was the introduction of overlay services on top of these real-time rails, and that really addressed leveraging some of the attributes of the real-time scale. And there was a mention of ISO 20022 earlier. With the adoption of ISO 20022 as a message protocol, That gives the opportunity to carry a lot more information with the payment than is traditional in the old ISO 8583 schemes, and that can extend to things like invoices and other documentation associated with payment that might help with the reconciliation at the other end. Often there is a service which is a proxy for account numbers, as this is an account-to-account scheme, rather than having to put all of the bank identifiers and account identifiers in, which most people don't carry around in their heads. Then a lot of the schemes introduce a proxy system. In Australia, it's called NEID, could be called PayID, and this allows customers to provide their mobile phone or email address or some other, can be a variety of different proxies. In some cases for corporates, it could be the name of the corporate itself, which is then linked in the ID system to the account. Therefore, they don't have to use that, so it becomes a much simpler thing, particularly in mobile applications, in order to identify the payer and payee using those methods. But then you start to look at the potential for what we call second and third order. I'll just explain. First order payment would be the simple kind of P2P, person-to-person transfer, where one can send funds in real time from a payer to a payee, receive notification that the funds have been received, and know that the funds will be in the account in seconds. That's a straightforward first order. We move into second order, where now you might provide information or data around that transaction that might be the trigger for other things to occur. It may be part of a smart contract or something that might trigger that as the funds arrive, that goods could be released. It may provide for funds to be moved out of escrow or something of that nature. And then we move into third order payments, where actually the payment now gets linked into a kind of end-to-end value service, where you can trigger things like in the purchase of a vehicle, where it may start to bring into things like the registration, insurance, and a variety of other things wrapped around the payment. So the transaction's at the heart of that. But these are some of the things that we currently talk to banks about in how to leverage these new real-time schemes.
Thank you very much, Graham and Mike. That's great insight. Thanks so much. So just to sort of summarise on what we heard from Graham and Mike there, and pull together a sort of global view of that. You can see there our global view really of the activity that is going on in real-time payments around the world. Many, many different countries that are either already live with one of these real-time payment schemes, or are implementing such a scheme, or are planning to implement a scheme in the very, very near future. What we'd now like to do is to move on and try and actually make this a little bit more relevant to the market in Saudi Arabia, and look at really how this is impacting the Saudi banks and the Saudi financial institutions. So, Lufti, maybe you could share your views on the impact that real-time payments may have in Saudi Arabia. Maybe help us understand how this might also impact some of the other payment systems that are already used in the kingdom, and why this might affect the technology choices that the institutions will need to make when they're considering a vendor to choose to provide a platform for their real-time payments.
Sure. I hope my voice is a little louder than it was at the beginning, so please let me know if it's not. So, SAM has always been the sort of lead innovator in terms of payments across the kingdom. And so over the past 3 to 4 years, they've been undergoing quite a big transformation in the payment services, starting with the infrastructure, but also the enablers that are required to make sure that this is a success. So a while back, they realized that the Sharia or the RTGS platform that they've got was not best suited to support the high volume, low value payments, and initiated a long process to build a very comprehensive plan on how best to meet the ever-changing payments landscape, and very customized specifically for the kingdom. So this was done in a very conjoint fashion with the banks in the kingdom, where a number of working sessions, one every month over the course of almost a year, was established, and there was a co-design on for the basis of the automated clearinghouse, or REACH as they ultimately named it. I think the process concluded with a number of elements. It was not only a very clear understanding of the volume, values of payments happening across the kingdom, and this was very much fragmented across the SME, the corporates, the government, as well as personal payments. They understood also what was the level of digitization of the payments, the cash and checks and transfers that were happening. And very much they tied it with the global best practices. I know that Sama traveled to a number of players around the world to understand what's happening and where is the trend going forward. So they built a very comprehensive blueprint of where Saudi needs to go. And this is about 2 years ago. They already realized that they had to go 24/7. They had to go real time. And they had to sort of build a future-ready payment platform, as they put this. I think the key aspects that they really worked on was how to tie this ACH into the existing payment platforms that they've got in terms of Sadad, Mada, and others that are not only in place but very much used by the community of businesses and consumers. More interestingly, they also started to lay a roadmap of how would they be able to integrate it with other payment platforms, ancillary payment platforms such as health insurance and whatnot. So, I mean, how does this affect the kingdom as a whole? For the past few months, Sama has been finalizing the overall procurement to start the launch of implementation of the ACH platform, and this will be happening, as mentioned early on, in the near future. But I think that specifically in relation to how are the banks affected? You know, just like there was a conjoint planning session, I believe that Sama is still continuing with the conjoint planning for the implementation, where they've set up a number of working groups, not only to make sure that the implementation will be rolled out in an orderly manner, and the planning on the technical side is going to happen properly, but there is also an early initiatives on the ISO 20022 conversion, and how is that best done. I think Mike also said it very properly in terms of what needs to be done in terms of within the banks to ensure that, you know, real-time payments is not just a platform specific feature, it has to be end-to-end. So how do the banks ensure that they are meeting an end-to-end SLA of debiting or crediting a customer so that the funds are being available immediately?
Yes, thank you, Lufty. Thanks for the insight there about the Saudi market. So what we'd now like to do is to move on. We've talked about the global nature of immediate payments. We've also given you some insight into the impact that we think this will have on the Saudi Arabian market. I'd actually like to move forward a little and talk about the business case for real-time payments. Again, I will in a minute ask my colleagues from Accenture to give you their views. Again, a little bit of background here. So from a survey that Ovum did last year, 66% of banks that operate in markets with live real-time payments infrastructure view this as a revenue driver for their institution. And clearly that means, you know, that there is a business case here for banks to use this as an opportunity to drive revenue. This is not just about, for example, complying with a regulatory mandate or viewing it as a compliance issue. This is something that banks that treat this in the right manner can use to drive revenue opportunities. So, Graham, ask you to comment. Maybe you could give me some thoughts on what kinds of added services you're hearing that banks are thinking will have the most impact, that will help them to drive revenue from real-time payments.
Yeah, look, it's an interesting topic, David. And certainly what we've seen in Australia is the banks trying to work out where these new business opportunities lie with the rollout of NPP. And I think there's a few dimensions to it. It's not a one-size-fits-all. On the retail or consumer side of things, I've seen the banks in Australia take a different view to how they've implemented real-time payments for consumer to consumer. Some of the banks have made it completely transparent to the end user that they are running a transfer over the NPP rails. Others have made it more explicit and created new, I guess you could say in inverted commas, new product lines for the real-time transfer. But where we're seeing the real interest in terms of value creation is actually more in the corporate and the government sectors, where these organisations spend a lot of money doing reconciliations, remittances, high volume remittances that require data, and by leveraging the real-time nature and the rich data nature through ISO 2022, the banks are able to offer some new services to these organisations that actually save them a lot of money, and they are willing to pay for over and above just a standard transfer of funds from one account to another. So we're certainly interested in that. The other one, in terms of capability that we're waiting for NPP to implement, it's on the roadmap still, is actually the request to pay. And we see request to pay as a key capability to opening up new opportunities across the spectrum of consumer, small business and corporates, to enable them to create new digital services leveraging request to pay capability. Mike, I don't know if you want to add anything else, but I see from a business case point of view those sorts of areas being of interest.
Yeah, absolutely, Graham. And yeah, just for those who are not familiar, the request to pay is the name given to what is effectively a credit pool. So the traditional P2P is where a payer can push funds to a payee. The request to pay is where you know, particularly a service provider, a company, a corporate, SME or whatever, can actually request funds in payment of some service, and you know, that's pulled from funds from the payer in this case, where they will authorise those funds to transfer. And important to remember again, as I said before, with the additional capability of ISO 20022, that request to pay can be accompanied by an invoice, a bill, or something of that nature to explain what those funds are about. And certainly, you know, I think the challenge with the consumer, if at the end of the day all you're doing is transacting funds in real time, then the tendency in consumer markets is that they feel that should be for free or certainly extremely cheap, in which case it's difficult to make business cases, and that seems to just be a hygiene service that the banks have to provide to customers. So in the consumer market, one's starting to look at additional services in front of and behind the transaction, and you know, typically people look at things in which you know, splitting bills is a classic example, but other ways in which one is adding value where one could extract a fee for that. But as Graham said, the corporate world, and you know, we're seeing some interesting prospects coming out of the UK and the early stages in Europe, where open banking, which provides real-time information, can be responded to or acted on by the ability to make a real-time payment and move funds straight away. And that's obviously important for Treasury, in corporates, in you know, liquidity management, in managing their cash flow, etc. The ability to move those funds in real time can be a real advantage, and therefore that's something for which a bank can charge fees for providing you know, that
Sure.
better control of cash flow.
Thanks very much, Mike. So again, what I'd like to try to do now is to again add some relevance to the Saudi Arabian market. So, I mean, lifting a name, maybe you could share your thoughts with us about the relevance that you see maybe to some of these specific services to institutions in Saudi Arabia are there specific opportunities, for example, with these overlay services that might be unique to the Saudi market, or that might provide a quicker way for the banks in the kingdom to realise a return on their investments in real-time payments?
Sure, David. Maybe I can start. So I think very much everything that's happening in the kingdom is very much centered around Vision 2030 and how the different financial institutions as well as the central bank can really support that. I think one of the biggest goals of SAMA and the Saudi Payments Company is to really figure out how they can decash the economy as quickly as possible. And I think that the launch of ACH with the real-time payments scheme and open banking is very much key to that. So how are they organizing Sadat, Madan within the Saudi Payments Company? How are they launching new services that will enable companies and banks to, across banks, very easily help people execute P2P and other types of payments that will launch new services and whatnot for the people as well as the institutions within the kingdom. I think more sort of on an institutional level, there's a very big push from Saudi 2030 vision to the diversification of the economy, and specifically through the SME economy. One of the killers of the SME economy is the liquidity, and how can our real-time payments as well as open banking play a pivotal role in enabling the cash flow for these smaller organizations to stay fluid. So not only will this allow them quicker access to the receivable from digitization, but also benefit from a more innovative scoring mechanism and increasing the affordability of lending products, both from traditional sources, from banks as they are today, but also more innovative lenders in the form of fintech players. And finally, on the topic of fintechs, I think that there's a large slew of entities that are knocking at the door in Saudi for the Saudi market, really wanting to get in and be able to play a large role in terms of offering customers services that currently Saudi players, Saudi banks don't have, and it's an opportunity for the banks to partner with these players and offer these to directly to the customers. One of which is, for instance, personal finance management. How can these fintechs use the technology and the infrastructure that's in place today to better offer insightful readings into customers' accounts and their money management, which affords them a great amount of loyalty and stickiness, which translates into a very positive business case.
Okay, Lefty, again, thank you very much for that specific insight into the market in Saudi Arabia. So moving on, you heard from Mike and Graham earlier that one of the real areas of value that we see in real-time payments is actually combining real-time and open. So combining the idea of real-time payment rails and the ability to move money in real time with the concept of open banking, providing simple, easy, open access to those payment rails and allowing banks, financial institutions and fintechs and so forth to create new and compelling services. And again, this is a revenue opportunity, for financial institutions and banks to attract new customers, to modernize their payment business, to reduce costs, to compete with emerging players, for example, that may be disintermediating some of the banks were they not to compete. We've seen around the world lots of different use cases for this combination of real-time payment rails with open banking and open APIs, for example. And we've listed a few there on the screen for you. Again, I think I would call out what Mike talked about earlier, so the request for payment as being the thing that is ultimately going to drive a lot of this capability. So the ability to use this kind of electronic invoice capability to be issued, for example, from a merchant, from a corporate, to their customer, which could be a retail or a corporate customer, in order for them to initiate a payment. And you can obviously see how that could start to replace or even disintermediate some other forms of payments that people may have used to support their payments to corporates in the past. One of the things I would say about the combination of real-time and open is once you start to use APIs, it gives you a number of different ways to kind of address this request for payment capability. So what we've seen, for example, in Europe is that there is not a request for payment capability on the real-time payment rails, but you do have that through APIs that are exposed as part of the PSD2 initiative. In other markets, so certainly in the United States and I think also in Australia, they've actually added the request for payment capability to the real-time payment rails. I'd like to bring Mike and Graham back in here. I mean, do you think there is anything in terms of the payment use cases that we've listed there? Is there anything that particularly stands out to you as adding real value that banks should be concentrating on? Anything that maybe that we've missed, or any thoughts really about the value of combining real time and open?
Look, those cover the main ones, David, and we've touched on a few others. And probably just to put some context around it, real-time payments, even with the ISO 22 rich data, gives you a particular lens to a use case that a customer of yours is operating in, and the data that gets attached to that payment instruction is typically directly related to that payment. When you then start adding in the broader amount of data that open banking allows, which includes product information, pricing information, transaction histories across a whole range of types of products that customers might have, it enables you to unlock an additional layer of value, because you can, for example, see if a customer has the ability to pay your invoice before you ship the goods to them, saves you the hassle of having to load up the truck, get there and then return the goods without the payment. And enables you to what we call bring to life real-time commerce. And our sort of point of view is that the combination of real-time payments and open banking is what creates this real-time commerce. Mike, anything else you want to add?
Yeah, look, everyone's covered everything quite well. I guess I just want to draw attention to one thing that's kind of often overlooked with the attention of real-time for the actual value transfer, as was mentioned before, but I think it's just important for people to recognise that typically, a key component of these schemes is real-time information, and some of that can seem a bit trivial, but the real-time confirmation stuff there, instant confirmation. It says person to person there, but it equally could be between corporate, or could be B2B or B2C, and just the immediate or near real-time sort of confirmation of funds arrived can be a trigger for a number of other things that might be part of an end-to-end business proposition. So again, I think don't lose sight of the fact that there is real-time information in these schemes as well as real-time value, and of course that's real-time information, not something that's typically available on some of the other existing schemes and cards, RTGS, SWIFT, etc.
So Graham, Mike, thank you very much. So we were hoping to run a poll. Unfortunately, we have some issues with the technology to do that, so I'm going to move on slightly and talk really about what is coming next in real-time payments. So we briefly mentioned this at the start of the presentation. One of the key things that we are seeing when we talk to banks and financial institutions all around the world is significant interest in the ability to extend real-time payment rails across borders, and again, whether this be regional payment initiatives or whether it be truly global real-time payments. It is something where banks see a huge opportunity, and there is a real push to make this a reality and find a way to overcome potentially some of the business, regulatory and technical limitations that may have held this back in the past. Graham, Mike, I'd be interested in your views. There's trends that you're seeing as well. Maybe you could talk to some of the different options that you're seeing that banks are looking at.
Yeah, look, it's definitely a trend. We've seen it starting to happen in Europe already. In Hong Kong, for example, the real-time platform that they're establishing does real-time cross-border into mainland China. Not only that, it does it in multi-currency as well, which is another complexity that they've implemented. And then we've seen, organisations like Ripple establish quite a reasonable footprint across the world with consortium banks that are starting to use Ripple for, production payment transfers cross-border. Swift have released their GPI platform. They say they see that as a viable alternative to Ripple. And even Visa, for example, are building out their B2B payments platform to compete potentially with Swift and Ripple as well for cross-border international payments. Again, the business case behind this is not only just the real-time aspect to it, but also the transparency and visibility, because traditional nostro-vostro payments can be quite opaque from a customer point of view. And so part of the business case behind this digital transformation of international payments is around creating a better customer experience. Probably the only other comment I'd want to make before I hand over to Mike is also, what I hear a lot from a number of banks when I talk to them on this topic is, well, what will this mean for my foreign exchange revenues? And that's an interesting topic which I don't have a good answer for, but I know it's something that needs to be considered. Mike?
Yeah. Good point, Dan. And look, it's absolutely a trend, and we've clearly seen that in Europe. Although it's probably important to remember that there's a fair amount of standardisation there within that region, if I could call it that. And that may not necessarily be the case in other regions. Certainly within the Asia-Pacific region, it's certainly a topic. It's certainly talked about. It's certainly objective to look at how they could connect the different national real-time schemes between, for instance, Singapore, Thailand, Australia, Hong Kong. But, I think there's still a few challenges because of the extra data payload and all that. We start to have to think about data sovereignty in terms of how that's being handled, and not to mention, as Graham said before, the FX factors. So I don't disagree with the slide in terms that I think it will be achievable, but clearly in some cases it will be easier because of standardization, and ISO 20022 will help that, of course. But there's still a little way to go before that we really see that happen in some other regions.
So, Graham, Mike, thank you very much. Again, Lufty and name if you're there. What I'd also like to get your input on is we've talked also about sort of like regional real-time payment initiatives. So we've seen in various areas around the world the idea of creating regional real-time payment capabilities, and you have things like SEPA Inst in Europe. I mean, is there anything like that that would be relevant to the banks in the kingdom, maybe that you could talk about?
Yes, definitely, David. There are currently two major initiatives happening in the Middle East. One is a cross-border payments platform being led by the Arab Monetary Fund. It's led and sponsored on behalf of the 22 central Arab banks. And this is the objective of this cross-border payment system, or it's called the Arab Regional Payment System, ARPS in short, is to facilitate the flow of money from one country to another, specifically to reduce the time and cost involved. This project has been underway for past maybe 5-6 years, and is now just kickstarted the implementation phase, which this central infrastructure will sort of replace the multitude of hubs of correspondent banks and replace them with one. It's supposed to have a multitude of regional as well as international currencies, and it will include 24/7 real-time as well as potentially a distributed ledger technology. This is something that is still being looked at. That's one of them. The other one is more specific to the GCC, where the central banks are looking and have started to put together an infrastructure to better tie in the central banks together, as well as to facilitate the trade flows amongst the GCC bloc of countries. Both of these are, very interesting infrastructures. How they're going to be used separately and conjointly is going to also be interesting for us to take a look at. And of course, how the banks will be, let's say, incentivized to plug into both or either one of them is also going to be something of interest for the banks to keep an eye on. From what I understand, the banks have been part and parcel of the implementation or the design and implementation process. So this is definitely another set of initiatives and activities for the banks to plug into.
Lovely. Yep, thank you very much for that. So we'd now like to invite any questions from the audience that you may have for the panelists. You should see that there is a Q&A feature on the WebEx platform that you can use. So if you do have any questions, please do send those through, and I'll address those questions to the panel. Do have a couple of questions that have come through already, so whilst we're just collecting any other questions, I'll start with one of those. So probably a question for Mike or for Graham. It's a great question. So you talked about the capabilities around request for payment earlier and combining real-time and open. The question we had was, do you see that as being a feasible replacement for card payments? And indeed, is that something that's even happening anywhere in the world yet?
Yeah, that's a really interesting topic. It is going to disrupt card payments, and I don't think it's any surprise why organisations like MasterCard acquired Vocalink. And we've seen an example of that recently, where I think it was Deutsche Bank have done a deal with one of the major airlines in Europe to conduct all of the airline payments, e-commerce airline payments, via the real-time payment rails as opposed to the traditional card schemes. So I definitely think there is scope for disruption there. It's not going to happen straight away, but I think it'll be a slow burn, but I think it will definitely be something that the card schemes are concerned about. Mike, what do you think?
Just would agree. Yeah, I think there's some inevitability around that account to account. I'm not sure. That was a scheme that Vocalink were launching in the UK. I haven't followed that. I'm not exactly certain where they are with that, but that was probably the first commercial implementation using the real-time rails for commerce.
Yeah, so I mean, I can actually add a bit of context there. So yeah, as you mentioned, Zap was Vocalink's sort of attempt to enable this very, very early on, actually even before things like PSD2 had emerged. And I think for a number of reasons, it's been slow coming to market. There does seem to be a lot of activity around that now, and they've renamed the initiative as Pay by Bank app now, and we do seem to be seeing a lot of interest in the UK market. There is a lot more information coming out in the market about banks looking to adopt that, merchants wanting to adopt it. But I think it may just have been a technology that was at the point at which it was announced, maybe it was slightly ahead of its time. The market's moved forward, and clearly now's the time that people wanted to be adopting that technology, and we are starting to see things happening with that in the market now. The other question that I have that came through, and it's probably more for Lufti and for Naeem, is more specific to the Saudi market, and it's really about the opportunity or threats from fintechs in the Saudi market. And for example, does the regulatory and compliance issues in the Saudi market, does that particularly affect how fintechs might be able to operate either independently or in conjunction with banks in the Saudi market, and is that particularly different to how we've seen fintechs, for example, in other countries?
Sure, I'll take that, David. So I think that's a very good question, and I think that SAMA has gone to quite a bit of strides to opening up the market to fintechs and third-party players. Over the past few years, there's been a number of fintechs that have tried to enter the market. Some of them were, let's say, rebuffed because they didn't, the SAMA felt that they wouldn't necessarily meet the requirements of the banking industry. But more and more, it is being left to the banks to judge how they want to take this innovation or innovative players, how they want to partner with them, how they want to incorporate it. But more importantly, how do they make sure that they are fit for the Saudi market? In many instances, a lot of fintechs have a cookie-cutter approach, but SAMA and the banks have been quite keen on making sure that these are going to fit the requirements of the Saudi market. So I think that going forward, especially with Saudi payments company becoming a lot more agile and a lot more open, you'll see a lot more other players coming in. Some of them will be working in conjunction with the with central infrastructure players, and others will be working directly with the banks. So it's, as always in the payment space, it's a very interesting, very exciting time, and I think that it's even more so in Saudi Arabia.
Again, Lufti, thanks for that very, very insightful information. So I'm not sure if we have any more questions online. I'm not sure that we do. We are almost out of time. So thank you to everybody for spending your time with us today. I think you'll all agree it was a very informative and interesting session. I'd particularly like to pass on my thanks to everybody from Accenture for taking the time today to join the panel and share their experience and their knowledge with us. I've certainly found it a very, very interesting exercise. The session has been recorded today, so we will be able to send a follow-up email to you so that you can access the recording, share that with your co-workers. Obviously, you can see there we have the email address, so if you have any requirements to follow up, and again, that can be either directly with ACI or the other panelists, then please do use the email address there to get in touch with us, and we can direct your queries accordingly. We will also send you a post-event survey that will appear on your screen as you exit the webinar. The feedback that we get from people that attend these webinars is really, really important to us. So we'd be very grateful if you would take the time to just very quickly complete that survey for us. So that now concludes the session. Again, thank you to everybody, thanks to the panelists, thank you to the audience, and enjoy the rest of your day. Thank you for joining our session.
Thank you, David.
Thanks very much.
Thank you. Good night.